Alright guys, welcome back to the channel. So it's Monday, we have a lot going, well, I had a lot going on this morning with kind of rearranging this portfolio. You guys know I'm doing more of the swing trading with options now in Robinhood. I'm fully out of Webull. I still have the app and I'm still using it for charting. But as of this morning before market open, here was my account. Alright, this is what I was in. I'm holding my 100 shares of NCLH for a while, and I have my covered call, which still has not hit 35, but I have till January 15th on that. I have an AMD call that I've been holding. I'm down $70 on that. And I have a PLTR call for January 15th that I bought last week on Friday, and I'm down $7 on that. Blink, I'm down $3, and Tesla, I would say down $10, not even $9, because I own almost one share at $6.29. Big gap up in the market this morning. We're going to show you market open. So my first thing I want to do is close out this PLTR call. I know it's going to be in the money, so I am going to close this thing out. And then the two stocks that I want to get into are Tesla and SPCE, because they had bad news about their launch on Saturday or Sunday, that it was not successful, I guess. So I was hoping for a big sell. There's a big sell-off on it this morning. I was hoping for some more, for a bigger push to the downside. So I'll show you guys that. So right now this contract as of Friday when the market closes worth $3.18. The market's about to open. And this is just a long call. There's just a January expiration date long call. I think the market's open, but it's taking a minute for this thing to catch up to what data is showing for the actual call. So I'm just giving it a minute. PLTR open and it started selling off. Still waiting. I paid $3.25, so $3.25 I paid for this call. Right now, as of Friday, it's worth $3.18. I don't know how long these things take to update. Alright, there we are. So now it's worth $3.60, $3.63. It's going up. 35. This is my total return just today, $42. So I'm closing this thing out. Trying to sell the ask. 370, but I'm looking at the chart. This thing is selling off pretty damn hard. So I just want to wait a little bit. $3.50, it's starting to go up. Then we get so I'm debating on what to do because I do want to close out on this position. So 340. Oh, I went to buy that. That's what happened. So I placed the order at 340 to buy. No wonder why. And that's good because, so you have to click, so when you want to sell, you have to click sell to close. I had it on buy to open. I put in 340 because the price was dropping. So I wanted to just get out at 340. And I was like, man, the price is above 340. Why am I not getting filled? It's because I placed the order to buy a contract and not to sell. So I canceled that. And because now the price is reversing, going back up, I decided to put a limit at 360. Remember, I paid 325. So I have the order to sell now at 360. And as you can see, the limits between 350 and 355, 350 and 360. Once it goes up, here's the order right here to sell this. Now I'm just waiting to get filled. Once this ask goes up to 365, I should get filled. So I just keep checking. I just keep clicking it. I'm still so new to this. $365. So I should get filled now because we're in between the bid and the ask. We're right in between. And here we go. There it is. One contract sold at 360. So I just made $35 on that. Now I'm in this AMD and the covered call. So let me pause it right here. Alright, so as of right now, I'll show you guys later. I end up getting out of these positions, the Blink and the Tesla. They don't count as day trades. Just like this position I just closed on PLTR doesn't count as a day trade either, because I didn't buy them today. So I end up taking I'm in this for $31. So I take a $3 loss on Blink, and I just want to free up the money from Tesla. So I end up taking a couple dollar loss, maybe like a $3 or $4 loss on that. So the only thing I'm holding right now is NCLH and this AMD call I'm going to hang on to. So my next thing to get into that I want to talk about are spreads, specifically call debit spreads. And I've been researching it. I've been looking it up and doing all the math on them. And they really seem to work out good in your favor if you're bullish on a stock. And the risk is capped and the reward is capped. So let me just, SPCE is the first call I decided to get into. SPCE. So here's the desktop for Robinhood, and the way to do you can go long and do a call debit spread, which you're gonna pay for up front, or you can go short and do a put debit spread, which you're gonna pay for up front. So both, one's bullish, one's bearish. They both are capped off on the downside and the upside. So there's not unlimited money you could make, but you're really it's really good for risk management. You're really mitigating your losses, other than just buying a long call or a long or a long put, which are still, what you're going to lose on that too, but you're not really affected by IV crush or time decay or theta when you buy one of these spreads. And these are just a credit spread. They're just, I'm sorry, a debit spread. Credit spread's the opposite. I think I do this wrong at first. So so how you do this is you want to sell a put, and then you want to buy a put that's has a higher strike price. That'll put you into a debit. I don't know why it's not popping up here for max cost. There it is. So max cost for this spread is going to be $65. So I'm risking $65. SPCE is selling off, so that's why I decided to get into this. But to make a long story short, I do get filled on this spread, but I end up selling it maybe a half hour later because SPCE does the complete opposite what I thought it was going to do. So I end up taking a $10 loss on it. And that is actually my third day trade. That's another thing I wanted to ask someone. With a cash account on Robinhood, I'm trying to turn off my my instant settled funds, and it won't let me turn it off. It's saying that there's something in progress and I have to wait for that transaction to go through, but I don't really know what it means. If it means the covered call I'm holding or not, but I'm trying to turn that off so I could just have as many trades as I want with my buying power. But I have instant settlement on, and I can't seem to get rid of it. So there's this SPCE contract. I'm down $2 on it. And the way to explain this or the way to figure out these strategies, what you could make, there is a options strategy calculator or a spread calculator that you can go to. It's free, and I'll show you exactly how to use it. So this is the call spread calculator. What you do is you put in the symbol, it tells you the current price, but this is wrong. So anyways, that's my first. I'm going to do this again. I'm going to do this the right way. So that's my first debit spread that I do. Put debit spread. And like I said, I end up selling that. The calculator's not right, so I can't really figure out how much I'm going to make because it's not showing the right price of the stock at that point. And it's not even showing the right strike prices on there. So here's what I did again. So I end up having a lot of buying power. I ended up getting into a Tesla call debit spread, right? So what that is, that's a bullish spread, and let me see. And what you want to do for this to get into one of these, now these are expensive. So if you were to just buy a call on Tesla, say a $560 call that expires this Friday, it's going to cost you $6,713, right? So if you want to get into a call for a lot cheaper, then you do this strategy, and you're going to get in for a lot cheaper. So the way that I figured this out is Tesla stock at the time is $615.64. If I do a deep in the money call debit spread, then basically I'm guaranteeing that I'm going to get paid as long as Tesla doesn't drop significantly. The further out of the money spreads you do, the cheaper they're going to be and the more profit you're going to make. You're actually going to make more than you're actually going to make more profit if you're in the money at expiration than the spread cost itself. So say the spread's $100, your max profit might be $250 if you're buying out of the money, and by expiration the price is in the money. So it's kind of, and that's risky, so you need the price to go up. So what I'm doing is I'm going to buy an in the money, pretty deep in the money call debit spread, which means this is going to be a little more expensive and my max profit is going to be less than the price of this trade itself. But the odds of me making a max profit at expiration are pretty high, because I'll show you right now. Let me do it so I could actually explain it as I'm doing it. So you'd want to sell a call, right? Well, I actually did buy a call first. So take the 525 call. So you'd want to buy the 525 call. And then you'd want to sell the strike above that, or however many strikes you want to go above that. So that would cost $8.48 or $848. I don't quite have that much available. And here's how you figure out. So on an option like this, right, costs $848. So the way you figure out your max profit is you take the strike prices, 525 and 535. You subtract them. So 535 minus 525 is 10. It's $10 times 100, because a option contract is worth $100, so that would be $1,000. So if this stays above 525 by these expirations are December 18th, I want to say actually probably a little higher. Let's just call it 530. If the price of Tesla is above 530 by December 18th, you will make $1,000, right, minus what you paid for the spread, $848. So you would make about $150 on this. So I actually want to go further, not deeper, but less into the money, but still in the money. So you buy a strike, and then you sell a strike above that. You can sell $5 above, that'd be $500. So this would cost $810. Here you go, optionprofitcalculator.com. So Tesla, you click get price, 617 is the current price. You would click buy, 535, then you would sell above that, so you'd sell a call 545. There's a difference. This would be $1,104. Actually, don't do that right. Something's wrong because these prices are all messed up. me see what's going on here. Yeah, that's not right. Alright, well anyways, I'll show you again, because I actually punch in the right numbers. So I end up doing, so here's what I ended up doing. I ended up doing a call debit spread, right? So I ended up buying the 560 call, or here it is down here. Here it goes. So on Tesla, I bought the 550 call and I sold the 560 call. So the 550 call cost $8,043. The 560 call to sell was $7,278 credit, which gave me an average cost of $763. So this contract cost me $763. And then we'll go to the calculator and we'll punch in these exact numbers, because I know exactly what I paid for them to the cent. And you don't really know until you get filled on the contract. So as of right now, I'm up $84. And here's the calculator for this exact contract. I punched in exactly what I paid for the call and what I sold the other call for. And here it is right here. So these were December 18th, this Friday. So basically, as the week goes on, because I'm in the money on this, I'm going to profit. As the week goes on, I'm going to have more of a chance to profit. Right now, the price jumped up to like around 650, I think. Every day that goes by, I'm going to make more money if the price stays above a lower price. So by expiration, if Tesla's above 560, I'm going to make $247. That's almost guaranteed. 560, you're talking $100. So let's just do this right now. I'll show you again. Let's pull up Robinhood. Here's what I'm in right now. I'm up $90. It's a call debit spread, like I said. Here's what I $71.85 is my credit. So $71.85 punched in right there. That's what I sold the call for, $560. I bought the 550 call for $79.48. This is my actual fill. So let's see. I have to go like this because. So I bought this one for $79.48. So here's Tesla. Here's the current price. $79.48, $71.85. Cost me $763 exactly. And then here's the calculation, just like I said. So right now, Tesla's at 638, 634. So yeah, I'm right up $70. So tomorrow, if the price goes to 650, I'll be up 140. But if it drops down, I'll be down. And it doesn't matter. Theta's not going to eat away at this, because I'm credited with my buy. My sell credits my buy. So as you can see, $560. If the price is $560 on Friday, I'm still going to make $237. And here's how it works out. The 1,000, the total cost, I would make 1,000 minus my entry, 763, which is 237. So I'm willing to risk the 763 for Tesla to drop down to 560 for me to make 237. For me, it's kind of worth it. It says it all right here. Maximum risk 763 at a price of 550 at expiration. Maximum return 237 at a price of 560 at expiration. 557.64, I'll break even on this trade. And that's it. So that's how you do. I hope that I went about this in a non-confusing way for you guys. But let me do a live explanation on this. Man, look at just the call. It's up 1,122. But I'm taking out what I paid with the other one, so that's how I get 90 bucks. So let's just go to Tesla. Just so I could do another example. You go to options. So if you wanted to buy, so right now the price is 636, right? So you can buy this call in the money and then sell this call out of the money. This spread is going to cost you $670 and expires Friday. So let's do the calculator on it. A 635 and a 650. So you want to buy 635. Go to the mid-range. That's in between the bid and the ask. You want to sell the 650. Cost you $627. And if Tesla by Friday is over 645, you'll make $373 on this. If it's over 650, you'll make $873 on this contract. And you can close these out early. Say by Wednesday, the price is at 657. You can close out for a $205 profit. Or you can close out for a little loss. You can go either way. And that's how this works. So I'm going to be going over more types of spreads. This is a call debit spread. You can do a put debit spread, which is a complete opposite if you're overall bearish on the stock. And you can go out of the money on these. You can even buy a way far out. You know what? I'm not even going to get into that today. I'll get into that another time. You can actually buy a way far out call out of the money, and then you could sell premium off of that call. And you can actually have that call pay for itself. I'll go over that another time now. So that's going to be it for this video today. Hope you guys enjoyed it. Hope it wasn't too confusing. And I'll see you guys in the next one.